Hi, welcome to this video where we're going to cover through building an equipment budget for your snow division. Now, your equipment budget is a little bit more complicated than some of the other budgets because you've got a couple of factors going on. So here's some rules to help you build it accurately. Number one, now when we say the word equipment, we mean vehicles and equipment. So equipment's just going to basically be a generic term for everything with an engine. It could be a snowplow truck, we'll count that as equipment. It could also be a loader. Now the next thing is in the equipment budget itself, we want to make sure we only include job equipment only. Or by job equipment, what we really mean is estimated equipment. For example, if the owner has a truck through the business, but that truck's not used for plowing snow, that truck needs to be in the budget, but it's going to be in your overhead budget. Because we're not going to price that owner's truck when we bid a job, it's not going to be part of the estimate for a job, then we have to put it in as overhead, so it gets recovered as part of the overhead markup. So when we're building our equipment budget here for our snow division, we only want to include snow equipment that goes out and works on jobs. Or, and a better way to think of it, is snow equipment that gets estimated when we estimate work. So the other tricky thing about the snow budget is just that you have two types of equipment in snow. You probably have equipment that works just in snow. And that might be something like an ag tractor as an example. Lots of maintenance companies might use ag tractors to help push snow on sidewalks and lots in the winter, but then those ag tractors just sit all summer. They don't really have a use for them. In that case, the costs for the ag tractor need to go entirely in the snow budget because even though we own it all year, we only use the ag tractor for snow. We only have it because we do snow, and therefore snow should pay the entire cost of the ag tractor. Then there's other equipment like snow plow trucks. And a snow plow truck will probably be pushing snow in the winter, but then pulling a maintenance or construction trailer in the summer. And that kind of equipment we need to split between budgets. The snow budget's going to pay for its portion of the plow truck, and then the summer budget, whether it's maintenance or construction, is going to pay its portion of that truck as well. We'll take a look at all these examples and how to split it when we get into the equipment budget, which is next. Here I'm going to pull up sort of a half-finished equipment budget. I'll explain the basics and then I'll get into some real examples. At the top here, you've got fuel and repairs and insurance. Now what you want to do to get these numbers is pull a profit and loss statement or some financial statement out of your accounting that shows your expenses in your snow season. So as an example, let's use November 15th to March 31st. Let's say that's our snow season. If I pulled a profit and loss statement for November 15th through March 31st, then I'd get to see exactly what we spent on fuel and repairs in that period and could estimate that most of that cost would be for snow. What's critically important to remember is that not 100% though of your fuel and repairs are going to be for your snow equipment. Some of those fuel and repairs are going to go into things like the owner's truck, again, assuming the owner's not plowing snow. Or it could go into salesperson's vehicles. Those vehicles don't get estimated when we price snow, so the cost of that fuel needs to go into overhead. Same thing if you have a loader at the yard that loads salt into trucks. That loader's not getting estimated. The fuel for that loader is certainly not getting estimated, and therefore it has to be in overhead. So one general rule of thumb we've used to help get around this little issue is that we can guesstimate how much fuel would be used in the field versus overhead by sort of counting the number of units of equipment we have. So let's say I'm a company with 10 vehicles and equipment. 8 of them work out in the field. 2 of them are for the office. Maybe it's an owner's truck and a salesperson's car. What I might do then is take 80% of my fuel, because 8 of the 10 vehicles I own are in the field. I'll take 80% of my fuel and put it here in my equipment budget. And then 20% of my fuel, to cover fuel for the 2 office vehicles, would go in the overhead budget. Now, it's not an exact science, but unless you're tracking your fuel and repair costs by specific piece of equipment, it's going to be difficult to get a really accurate number. Now, if you are tracking it by equipment, then great. You should be able to pull a really accurate fuel and repair cost for your snow equipment. Now, we've also got insurance and miscellaneous costs. This could include things like licensing and the cost of your insurance for your vehicles. But it's also important to remember that this does not include your liability insurance. That's not part of equipment. Your liability insurance would be an overhead. So if you know what your vehicle and equipment insurance expenses are for the months of your snow season, you're going to plug it in here. If you can't tell me that number, or you don't know what that number is, then you're far better off to leave this at zero and put all your insurance, etc., into your overhead expenses, and then you don't have to worry about it so much. Just remember, no matter what scenario you're using, that you only include the expenses for the snow season, because we're building a snow budget here. I don't want my whole year's insurance. I just want the months of the snow season. I'll put my number back and continue on. Over here, we have equipment rentals. This is what you'd spend on rental equipment. Again, for snow and ice, we only want to include our snow and ice related stuff here. So that'd be, and if I'm going to rent anything for snow and ice, that's where the cost of that would go in there. Now let's take a look at entering some pieces of equipment. We'll do a couple of different scenarios here, but I want to start with the simplest scenario and sort of work our way up. The easiest place to start might be something like a snowplow. So we'll start there. I'm going to go down here to the new button and add that. I'm going to type in here a snowplow. Now let's say I have 5 snowplows in our company. Now for the purposes of budgeting, I don't want you to worry about whether you own them or whether you have just purchased them or whether you have a loan for them or whatever. At the end of the day, all your equipment has a purchase cost, a residual value, something that it's worth at the end of its life, and a year's life. And that's really what we want to budget for. So whether your snowplow is brand new or whether you've had it for 6 years and it's been paid off, we still need to budget for it because we still want to make sure that A, our customers are paying for the use of it, and B, that I'm recovering enough to replace it. So that at the end of its life, I've charged my customers enough to go buy a new one. Ideally, you have that cash on hand if you've done so. So here I'm going to put in that we have 5 snowplows. I'm not worried about what we own or what we don't own. I'm just saying we have 5. Next, I'll get into making sure we cover the ownership costs. Now, there's a couple of ways to enter the costs. Over here, you could type in the cost per year each. Generally, most people don't know that off the top of their head, so we're going to use one of the calculators. And the calculators are found in the class column. There's a calculator for owned, there's a calculator for financed, and there's a calculator for group. A group calculator is what we used for a trailer when we did our company budget, and it includes a whole bunch of small stuff all grouped together. You're probably not going to use that for snow. There are a couple examples I could think of, but generally for snow, we're going to stick to one of the other two, the owned or financed. This example in particular, the plows, will definitely stick to owned or financed. Financed is if you're going to lease something, but you're going to release it at the end of the lease. So what that means is instead of leasing something for a certain period and then keeping it for a longer period, you're going to turn it back in at the end of the lease and go get another one. Now, the most common scenario is the top one, and it's owned. And owned is if you buy something and you own it outright, maybe you paid for it in cash. But maybe you even took a loan out for it. And if you take a loan for something, really you own it. You've just financed the money to help you own it. So we'll count that as owned as well. The only examples where you might want to use financed, again, is if you lease something and at the end of the lease, you're going to go give it back to them and lease another one. Everything else is more or less covered by owned. So I'm going to choose owned for the snowplow. Now it's important to pause here for a second, just recognize the fact that many owners wrap the plow and maybe even the salter in the cost of the truck when they're buying, leasing, or financing the truck. So it's all kind of one package. It's great for financing and leasing and keeping all that nice and simple. It's not great for budgeting to think of it that way. And here's the reason. The truck itself, we can split the truck out across snow and summer because it works probably in both divisions. Whereas a snow plow is never going to work in our summer divisions. We're not going to use a plow in maintenance or construction. So I split it because I can split the truck sort of 50-50 or 1/3, 2/3. But the plow, I have to put that one 100% to snow. That's the only way we can do it. So you can dig up your purchase price for the truck and sort of separate what was the cost of the truck versus what was the cost of the snow equipment. And you'll have all the information you need to do what I'm doing here. Snowplow, we're going to start with the replacement value of the equipment. So on this line here, what we mean is, what is that snowplow costing you to purchase upfront? And we call it replacement value because not all companies go buy brand new. Some companies buy used, some companies buy auction. Typically for a plow, you're going to buy that new, but not always again. So this field here means, what would you spend to buy or to acquire one of these 5 plows that we're doing here? So we're definitely not worried about what the plows are worth today. That's sort of irrelevant for the budgeting process. What we're worried about is, what's a plow going to cost us to go get? And let's say the plows cost us $7,500 to purchase. Now this would be based on whatever types of plows you purchase. There's high-tech plows and low-tech plows, and you'd put in whatever you normally purchase. And if you have some high-tech and some low-tech, well, you could have 2 types of snow plows in your budget then. You may want to go snowplow basic and snowplow advanced, or whatever you want to do. I'm just going to stick here with our plows are worth about $7,500 to buy. Next, it asks me for additional purchase fees, taxes, or admin costs. So if to build taxes, etc., into the purchase price, you can go ahead and do that there. Next up is total years that you're going to keep the plow. Now, we don't know exactly, but again, I'm not worried about plows I have today. What I'm thinking of is, if tomorrow we went out and got a plow, how much would I spend to buy it? And roughly how long would that plow last me? So I'm going to bet that a plow like that's going to last us 8 years, for example. And then it says enter the estimated value at the end of its useful life. So if I bought a plow for $7,500 and I kept it for 8 years, what's it going to be worth at the end of the 8 years? The answer for a snowplow is probably nothing. If you can get a couple $100 for scrap for it, great, put it in your pocket. But I'm not really going to count on any residual, and no one's really going to be buying an 8-year-old plow. Now the tricky questions. Enter the months per year you use it. Well, if my snow season's 5 months, I'm going to put 5 months there. If this is a divisional budget, which it is, we're building a snow budget, enter the number of months this equipment works in this division. So our snow is 5 months, or let's say our snow is 4 months. Our snow 4 months, so again, the plow is 4 months. And then the last question here is inflation interest rate. Now in this example, because it was a snow plow and we only use it in snow, these two are going to match. 4 months here and 4 months here, but you're going to see when we get to pickup trucks and other things why these two things might not match. I'll come back to that a little later. But next we got to put in interest and inflation rate. I use 1% here just to build 1% inflation per year into the cost of my equipment, so that I'm not only saving for the $7,500 I'm going to need to replace it, I'm also building in some inflation. So the final number it gives me, an annual return on investment or an annual cost of $1,000.15. That's per plow per year. And that's calculated because if I buy it for $7,500 and it lasts me for 8 years and it's not worth anything, and I build in a little bit of inflation, it's going to cost me about $1,000 a year that I need to be recovering from our snow customers to pay for that plow. So you hit done and you're good. My number is $1,115 a year each. And because I have 5 plows, it's $5,075 total. Well, that's where we get that number. So that's your straightforward example of a piece of equipment that gets used in snow and nothing else. Now let's take a look at a trickier one, and that's a snowplow truck. Now a snowplow truck is going to be worked on in the winter when it's plowing snow, but it's also going to be used in the summer when it's pulling a trailer for maintenance and construction. This is a little bit trickier, but most of the questions are the same. Let's take our example here and do that one. So I'm going to click New, and this one I'm going to do Plow Truck. And I might want to specify what kind here in case you have different kinds. Now, how many plow trucks do we have? Let's say I have 5 plow trucks as well. And I'm also going to say we own our plow trucks. So I don't lease them over and over again. So now it's asking me again, what's the replacement value? So what I'm going to do here is plug in what we pay for when we get plow trucks. If you buy brand new plow trucks or brand new trucks when you buy trucks, put in the cost of a brand new truck. If you buy used trucks, then put in the cost of a used truck. Put in whatever cost you use when you acquire a new truck. I'm going to go with the new example, so I'm going to leave it there at $40,000. Next up, you got to build in any additional taxes, etc. I can do that here. And after that, total years. Now, once again, it's really important to remember forget about your current trucks and how long they are and what you paid for them. What you're really thinking about here is, if I had to buy a truck tomorrow to replace a truck I own, what would I pay for it? And approximately how many years would I get in terms of life out of the truck? Some companies keep their trucks for 4 years and then sell them and go get new ones because they don't want the downtime. Other companies keep their trucks for 10 or 12 years because they think the cost of repairs are less than the cost of buying a new one. However you do it is up to you. You can do it in either scenario. So here I'll say, for example, I buy a truck for $40,000 and we usually keep our trucks for 7 years. Just don't worry about your current trucks at all. Think about, if I had to get one today, if I had to replace a truck today, what would I spend to replace it? And how many years life would I get out of that replacement truck? And what would it be worth at the end of its useful life? Now we put it at 0 for the snowplow. Snowplows aren't really worth anything at the end of their life, but a truck is. If I bought this truck for $40,000, kept it for 7 years, I could probably still get maybe $6,500 for it on the open market when we want to sell it and replace it. So I build that replacement cost in there as well. Now is where these two numbers become very important. Number of months per year you use it. Well, it's a pickup truck. We're going to use it all year. So I'm going to leave this at 12. Next is, if this is a divisional budget. It is. It's a snow budget. Then enter the number of months this equipment works in this division. So what I got to do now is pick the number of months that this truck works in snow. I'm going to pick 4. You'd obviously use your snow season. And last, you want to build in interest or inflation rate. At the time of this video, interest or inflation is around 1%. So that's what I'm building in here. It may be 1. You may want to use 2 in the future. Who knows where prices are going to be when you're watching this video. But I'm building 1% a year inflation into the cost of my equipment. So what I get now is an annual ROI of about $1,700 per truck. Here's something that's neat to see, though, why these numbers are different. The actual cost of the truck isn't $144 a month. It's significantly higher. And if I said that we use this truck all year and it spent all its time on this division, you'd see it's now $433. So the actual monthly cost of this truck is $433. The reason it was so much lower is because when we flipped this to 4 months, when we said that it works all year, but it only works for 4 months in this division, then what the calculations here is going to do is it's going to take 4/12 of the truck's replacement value and include it in this division. So the total replacement value is $433 a month. But when we're doing snow, if I drop that down to 4/12, so we're only using snow 4/12 of the year, then my monthly ROI is only $144.39, which means snow is going to recover 4/12 or 1/3 of that replacement cost because it's only used for 1/3 the time. And that's where those two things really come in handy. They will do the calculations for you if you use them right as to how much your snow budget should recover versus how much your maintenance or construction budget. This is a snow budget, and not to confuse you, but if I was going to do, or when I did my maintenance or construction budget, I would pick 8/12 here. The rest of the year would be in my maintenance or construction budget, and that maintenance or construction budget would be recovering $288. So it would be recovering $288. My snow budget would be recovering $144. And when you add them together, they would both be recovering the total $400 and change a month that we need to recover to keep our trucks, keep the replacement cost of our trucks coming in each month. Hopefully that makes sense. Certainly you can hit us up with any questions at support@golmn.com if you've got any as it comes up. But that's how to enter your trucks that get used in different divisions. It's not the simplest scenario for sure. We're trying to make it as simple as possible, but it is sort of complicated that you have a truck, you may own it, you may lease it, you may rent it. There's variables there. And then of course you got to split that truck up across divisions. So there's variables there. In those, 6 or 7 questions that we asked in that little calculator there, that'll sort of take care of all the math. And if you just answer them correctly, LMN will do the math for you so that you're budgeting the right amount for each division. Now, another thing might be something like a loader or an ag tractor. I'm just going to quickly glance at my calculator there for that one. I've entered here a loader with a pusher. I've put the total cost of the replacement value. So again, not necessarily what it's worth today, but what would it cost you to replace it? Whether new or used is up to you, but what would you spend to replace it? How many years are you going to keep it? Now, if I'm just using a loader in snow, probably going to get a lot of years life out of it. So I put 15 in here. What's it going to be worth at the end of its useful life? And then again, months per year you use it. So again, I've dialed this way back. If I'm only going to use this loader and pusher in the snow, then this is going to be 4 and 4, just 4 months a year total and 4 months a year in this division. If this was a loader that I used in the summer and in the winter, then it would look something like this. I'm going to use it 12 months a year, but here in our snow budget, I only want to include 4 months. And in my other budget, probably construction, I'd do the remaining 8. But here in snow, if it's just for snow, we want that at 4 and 4, and I've got the cost of my loader in there as well. So you can put as much equipment as you need in your equipment budget. Just remember to split it up where necessary and to only include equipment you're going to estimate. I did put snow blowers in here as an example to show you how I came up with it. But if you didn't estimate snow blowers when you bid a job, you're probably better off, well, you're definitely better off putting them in overhead. Otherwise, they're not going to be recovered. You have to check this list when you're done and just make sure all that equipment gets estimated when we bid a job. You estimate the cost of the snow plows or plow trucks. You estimate the cost of the loaders. You estimate the cost of the skid steers when you estimate a snow job, and that'll make sure that gets recovered. If it's too small to be estimated, for example, a snow blower, or even a better example, shovels, you're definitely going to have those costs in your overhead budget, and that'll make sure that your overhead budget recovers the cost of your small tools and equipment for snow. If you have any questions, as we stated earlier, that is one of the trickier budgets. Don't feel bad about it at all. Reach out to us at support@golmn.com. Thanks again for watching, and we'll see you in the next video. Budgeting materials gets a lot easier after this.